So now the first thing to consider on the US dollar is currently we can see we have an inefficiency resting right here on the daily time frame. So the first thing we do is to outline that inefficiency. If the dollar is going to keep going to the upside, we wouldn't be surprised to see price retest this inefficiency before an expansion to the upside. So the next thing, we go to the 4-hour time frame. So we're also going to look at the Forex Factory to see what high impact news that we do have for this new week. So looking at the 4-hour time frame, the next thing we'll do is to outline this key level right there. As you can see, that's the close of this inefficiency. This is the open of the inefficiency. This is the close of the inefficiency. Now, price could decide to come into this position, mitigate this level, and continue higher. But personally, if I am to look for any trade setup, I'll most preferably want to see price dive deep into this key level before any expansion to the upside. We'll go back to the daily time frame to still look at the overall key level that we're watching for price to gravitate to. So there's something I'm also going to bring to your knowledge today in this live stream. I'm going to wipe my chart, something I saw during the weekend. Now, if we look at the 3 weeks time frame, you can see very clearly on the 3-week time frame that this key level, this inefficiency, external range, this inefficiency right here is an external range inefficiency, and price mitigated it. And look at what we came down into, internal range inefficiency. So we mitigated an external range inefficiency. After mitigating an external range inefficiency, we came down to mitigate an internal range inefficiency. Now, when price does things like this, it can really be a very complicated price action. And if you look right here, you can see that this inefficiency is absolutely unmitigated. Now, I'm not saying that price is going to come into this position. I'm absolutely not saying that is going to happen. But it's also something to put into perspective that for any reason, the dollar could decide to gravitate to the upside, maybe because of news or whatever, could literally expand dollar to astronomical levels. Now, the first thing we do after price mitigating this position is to look for a confluence and low resistance key levels that price could gravitate to within this range high and this range low. We're not going to be looking for astronomical levels for price to come to. We're looking for low resistance key levels that price could come to after mitigating this level. After mitigating this level, the only time frame break of structure that we'll be interested in to look for trades is we count 3 time frames, smaller time frames to the left, 1, 2, 3. So after this mitigation, if we see a 4-hour break of structure, after mitigating this 3 weeks inefficiency, we will be looking for buys to the upside on the US dollar XXX pairs. Now we'll go straight to the 4-hour time frame, and on the 4-hour time frame, what do we see right here? We can see the structure already showing us a high, a low, a high, and a low. Right? Now, I wouldn't really consider this a 4-hour break of structure, in as much as it still does look like a high and a low that got broken right there. In as much as I wouldn't call this a 4-hour break of structure, because if we go to the 4-hour time frame, it doesn't really look the nicest of a structure. For example, you can consider this a low and this a high and this a break of structure. But in this case, what we can do to look at it a little bit better is inverted. We can invert the chart. Let me clear my screen. And if we invert the chart, it looks a little bit like a low on the 4-hour time frame and a high and then right here a break. And after a break, the next thing we saw, this was the last move to the downside before the major move that broke the structure. And as you can see, the bodies of the candle is always my interest. Price came to the bodies of the candle, mitigated the bodies of the candle. After that mitigation, we saw this expansion. The next thing we do, because we're basically following through with what the market is showing us, don't forget our overall market structure on the 12-month time frame on the dollar is bearish. So in as much as we're looking forward to see a buy on US dollar and the US dollar XXX pairs, in as much as we're looking forward to see a buy, we are not going to be buying to hold the trade to take any significant high or significant low. If we get into any buy position, we're looking for the next drawn liquidity, the low hanging fruits, the low resistance liquidity. What do I mean by low resistance liquidity? For example, right here is a low resistance liquidity. Right here is a low resistance liquidity. We'll have an inefficiency. This key level is a high resistance liquidity. If we are on a buy from this position, we're not going to be holding the buy to run liquidity above these highs. Not because price cannot do that, but because we are overall bearish. Now, it doesn't mean that price cannot rally above these highs. That can 100% happen, but there's no guarantee for that to happen. So if we get into any buy position on USD XXX pairs, which is also looking for a sell on XXX USD pairs like the euro, if we see a buy on USD card, we're going to take that buy for this new week. If we see a buy, we're going to take that buy and we'll look for the low resistance liquidity that price can easily gravitate to, and we'll take the trade to that key level. So what we're anticipating to see for the new week on the dollar is for a retracement into this inefficiency. And the moment price does that, we're looking for smaller time frame break of structure from this key level. Once we see a smaller time frame break of structure right there, the next thing we'll do is look for a retest, and then we'll target the low resistance liquidity zone, which is this key level, low resistance liquidity, inefficiency, inefficiency. So once price comes into these positions, we're closing any buy position that we're on. We close it and we'll be on the sidelines to watch what price will eventually do when it comes into this key level. Does that make sense? If you do have any question based off this analysis, feel free to drop it in the chat. So this is what I'm going to be watching. I'm going to be watching this very closely, and hopefully we do get into a beautiful trade setup for buys on USD card. So with this analysis, the next thing we're going to do, we're going to look at USD card because we're focusing on buys on USD XXX pairs, right? Now looking at looking at buys on USD card, for example, already if we go to the daily time frame, so I'm going to wipe my charts. Now, if we go on the daily time frame on USD card, you can basically see that we created a low, a high, a low, a high. This is our swing points, right? And right here, we broke this structural low. This is a break of structure. And if you look at the structure that was being created right here, low, a high, a low, a high. This was the last impulse move before a drop that broke structure. So this is my point of interest right here. Now, in as much as this is my point of interest area that I'm going to be anticipating for price to reject and then potentially continue to the downside to run the sell side liquidity, because this structure right here is bearish in my opinion. We were trending to the upside before we violated this low, breaking structure, closing up below it, This is my point of interest. But because of what I'm seeing above this point of interest, if we go to the 4 hour time frame, so we can see that a little bit clearer. Because of what I'm seeing above here, this right here, in my opinion, is low resistance liquidity, because there wasn't any external range liquidity that was taken right here before the drop to break structure. What do I mean by that? Now, this right here, this is low resistance liquidity. And that's basically what you see right here. We created a high, created a low, failed to create a higher high, drop down. That's low resistance. Price can easily hunt for this liquidity, take it, and then potentially reverse. And look what else we have right here, inefficiencies. So when we have a low resistance liquidity resting below an inefficiency, that is suspect for me. I'm anticipating for price to gravitate above that low resistance liquidity, take the liquidity, and potentially continue lower if the overall market direction is to the downside. So the first thing I do is to note this key level. This is a key level that could attract price to the upside. This is liquidity that price could be hunting for. So in as much as this position is my key level to watch for price very closely, if we're going to see any level of rejection from this position, I'm still watching the overall highs, because a lot of traders are going to be focusing only on sells right here. And you can see that each time price came into this position, a sell occurred, and then eventually another sell rallied, took liquidity off every single person that sold it, and I was holding that position without taking profit, wiped them out, sold off again. They were looking for another sell, wiped them out again, dropped down. For the people that finally got into a sell, they made a little profit, price rallied, wiped them out again, dropped down, breaking structure, closing below it. More traders are piling in for sales again. Most likely, price could potentially wipe them out again, because we still have this trend, this low resistance liquidity resting right here as well. Does that make sense? So LRL simply means low resistance liquidity. And the reason this key level is a low resistance liquidity is what I explained previously. After price created this high, it created a low, being this low right here. And then we saw a lower high, failure, failing to create a higher high, failing to run liquidity from the previous high. And then we saw price drop down, creating a lower low, leaving liquidity here. This is induced liquidity. It's low resistance liquidity as well. Now, what we do is our focus for this new week is going to be for price to come into significant areas, and we look for buys to continue higher, potentially to run this buy side liquidity. If we go to the 1 hour time frame, we can see that we have a bunch of inefficiencies right here, and we basically don't know which of the inefficiencies price is going to mitigate before it continues going to the upside. So we go back to the 4 hour time frame, and on the 4 hour time frame, the first thing we do, we mark out the entirety of the inefficiency resting right here. I'll make that a different color. So now I've outlined this entire inefficiency. We start scaling down to smaller time frames. We look at 3 hour time frame, and on the 3 hour time frame, we can see this right here is the close of the inefficiency. close of this inefficiency. This is the open of the inefficiency. This is the close. The next thing we do, we're working with the bodies of the candles. So you can basically see that right here, we created a high, a low. We created this overall high. Price came down, took liquidity from this low. After taking liquidity, we broke structure right here. After that break of structure, our focus is going to be on the bodies of the candles. We want to see price revisit the bodies of the candles. So these bodies of the candles is going to be our major key level where we'll be waiting for price to mitigate the bodies of the candle. We'll go to 3-hour time frame. 4-hour bodies of the candle aligns with 3-hour time frame. We'll look at 2-hour time frame. 2-hour time frame bodies of the candle aligns with 4-hour, 3-hour. And we'll look at the 1-hour time frame. And the 1-hour time frame, you can see the bodies of the candles right there. So what we do, we raise the box to align with that bodies of the candle. So the next thing we do now is we wait patiently for price to visit our key level. We look at 30 minutes, and 30 minutes aligns well with 1 hour. So once we see price coming to our key level, all we want to see is a 5-minute shift in market structure. So this is what I'm going to be waiting to see in the marketplace for the new week, and potentially if I do see price coming to this inefficiency, mitigates the bodies of the candle being this overall high and the overall low. If I do see price coming to this key level, I'll be looking for a 5-minute shift to market structure. I'm going to outline what that's going to look like. So if I do see price come in here and break structure on the 5 minutes or 15 minutes time frame, then I'll be looking for a retest and then continuation to the upside. So that is my analysis on USD card and also my analysis on the US dollar. And I'm going to be waiting patiently to see price gravitate into this key level. And then I'll be looking for entries to continue higher on the USD card. So now when I'm in a position for a buy position on USD card, I'm going to be targeting the low hanging fruit, low resistance key levels, inefficiency, low resistance key level. These are going to be my targets. First target is going to be this inefficiency, and the second target is going to be this high. Once price rallies above that, I'm closing every position and I'm being on the sidelines. And the reason for that is because anything that takes price above this low resistance liquidity and into this inefficiency, anything can happen from that position. We could see a reversal. I'm not saying that will definitely happen, but it is a very high probability that price could potentially come into this inefficiency and then reverse and go to the downside. But I'm not going to just randomly start looking for sales. What I will do is once we mitigate that position, I'll be waiting patiently to see a potential 30-minute shift in market structure. If I do see a 30-minute shift in market structure from here, then I'll start looking for reasons to look for sales on the USD card. Now, it's not a certainty that USD card is going to sell from here. Nobody knows what price is going to do. All we do is we'll do our analysis and then we wait for reactions from those key levels. The reaction is what's going to tell us whether to look for, whether our analysis is going to play out or not. If we do not see any reaction and price for any reason comes to this high, smashes through it, and then doesn't show any reaction, continues higher, then that means that USD card is bullish and could potentially want to rally above this overall highs to continue higher. That is 100% possible. In as much as that is not what I'm expecting the market to do, but what I'm expecting the market to do is relevant. The only thing that matters is what the market is eventually doing and how we react to it. So if the market comes into our key level and we see the reaction we're looking for, we take it. If we don't see it, we'll just be on the sidelines. No trade is better than a loss at the end of the day. That's how I see it. So that is my analysis on USD card. We're going to look at the Forex Factory to see the high impact news that we do have for the week. Today is Monday, and we have uh, high impact news on Monday, but this is not on the dollar. So let's look at on the dollar, euro. We don't have any high impact news on the dollar or the euro. Even though this is not a high impact or a medium impact news, but it still can bring volatility into the market because it's a final core CPI, and this final core CPI year on year, and these two right here, in as much as they are not high impact news, sometimes I've seen several times news that are not high impact or even medium impact bring in some level of volatility in the marketplace. And this is one of those kind of news that could bring in volatility. So I'll be watching to see the reaction in the market 10 a.m. London today, which is in about 30 minutes or something. So we'll look at Tuesday to see what we have on Tuesday. So on Tuesday, we do have high impact news on Japanese yen, medium impact news on Japanese yen, high impact news on Aussie, AUD, Australian dollar by 3:30 a.m. on Tuesday, 4:30 a.m. as well. And Japanese yen, another BOG press conference, high impact news, 12:30 p.m. Tuesday on card. CPI, this is going to bring a lot of high impact, a lot of volatility on USD card on Tuesday. So most likely we're going to be expecting that. So we'll have CPI on card, three high impact news on card, CPI, median CPI, trim CPI, and medium impact news on card as well, common CPI, and USD medium impact news, building permits on Tuesday as well. So expect volatility on USD card on Tuesday. So we're going to be watching that very closely. If price shows us what we want to see, we'll take a trade. If it doesn't, we'll just be on the sidelines because this is going to create a lot of volatility. And if you're at the wrong side of the market, you're going to get wiped out. So we'll only trade with the overall trend, which I've outlined in my opinion. On the intraday levels, I'm looking at USD card continuing to go to the upside for now until we run the buy side liquidity. Now on Tuesday as well, we have Japanese yen bank holiday. On Wednesday, we do have we don't really trade any pair that has to do with the Chinese yen as well, so we don't really pay attention to that. So 7 o'clock a.m. on Wednesday, we have British pound CPI. This is going to bring a lot of volatility on the pound. So if you trade GBP US dollar or GBP JPY on Wednesday, we're going to be expecting to see some level of volatility on GBP JPY and GBP US dollar as well, and all the GBP pairs. So on Wednesday is a very huge day to be very careful. 6 p.m. This 6 p.m. news is one of the most volatile news that I've ever witnessed in my entire trading career. I've never witnessed any high impact news that is more volatile than this 6 p.m. news. And they always come in pairs. They literally always come like this. Always. 6 p.m. 1, 2, 3, 4. 4 high impact news. 6 o'clock p.m. federal funds rates, FOMC economic projections, FOMC statements, FOMC press conference. This is going to create some level of volatility in the marketplace. Whether price is going to go to the upside or the downside, it's going to be heavy, very volatile. If you're not trading with the trend, I would advise, if you are on any trade on this day, Wednesday, try and make sure you throw your stop loss to break even and make sure you protect your account, because this can wipe out your account in seconds. And try as much as possible not to over leverage on any trade on days like this. Make sure you do not over leverage, because in split seconds your account could literally go to zero if you're trading on the wrong side of the market. So NZD, we have GDP 9:45 p.m. And then on Thursday, we do have Aussie high impact news 12:30 a.m. On Thursday, we have 8:15 a.m. Euro high impact news, double high impact news by 8 a.m. on Euro. 8:30, we still have high impact news on CHF and Euro, double high impact news on Euro. So basically, have 8:15 double high impact news on Euro and 8:30 double high impact news on Euro. So Thursday is going to be very volatile for Euro, and we're going to be watching that closely. So for Euro, my overall market direction on Euro from 12 months perspective remains bullish. And all I'm going to do on the Euro is to continuously wait for a deep retracement and potentially continue buying Euro to continue to the upside overall. But I'll be waiting for price to potentially come to extreme discount zones before engaging in any buy on the Euro. So 9 o'clock a.m. on Thursday as well, we'll have medium impact news on Euro as well, double medium impact news. At 9:30, we'll have high impact news on the pound. 12 o'clock p.m., we'll have three high impact news on the pound as well on Thursday. 12:30 p.m., one high impact news on employment claims on the dollar. Medium impact news 12:30 on the dollar as well. So on Thursday is going to be very volatile for the dollar pairs and also for euro that is inversely correlated to the dollar. 1:45 p.m. flash manufacturing PMI and flash service PMI. High impact news, double high impact news on the dollar. Then on Friday, we have one high impact news on pound, 7 o'clock a.m. And all day, we have a high impact news on Euro Summit, and medium impact news on the card, 12:30 p.m., double medium impact news. At 1 o'clock p.m., we'll have a high impact news on the US dollar. Fed Chair Powell speaks on Friday, 1 p.m. So we're going to be very watchful of that. So if you're going to be on any trade this week, just have it at the back of your mind. This is going to be a very volatile week because we have significant high impact news this week. So we're going to be trading very carefully and we'll only take trades that are aligning with the overall market direction and try as much as possible to avoid retracement trades. So for USD card, as you can see, overall USD card is still bullish, and until we rally above a low resistance liquidity and then see otherwise, in my opinion, I'm still bullish on USD card and I would like to see it continue higher, potentially rally above this buy side liquidity. So that is my analysis on USD card. On the dollar, if you do have any questions, feel free to drop it in the chat. In the next live stream, we're going to go over Euro, AUD, US dollar, and we'll look at other pairs and also look at Bitcoin as well. I appreciate you all for tuning in. If you do have any questions, feel free to drop it in the chat. I'll talk to you in the next live stream. Have an amazing day, everyone.